everybody. Welcome. It's time to get started, and we do appreciate you sharing part of your weekend with us today. We have traders attending this webinar from all around the world, so wherever you are, I do hope you're having a good weekend and no virus problems. I know these are tough times for a lot of people, and we hope you and your family are well and safe. This is Craig at Max Trading. Chris and Eusebio are here as well, and we're glad to include you as part of the Max community today. Other traders will join us later by video, and we welcome you also, and glad that you're participating in that way. We do like to say that the sun never sets on the Max kingdom. That's a little bit of a joke, but actually it's also the truth. We have members in all corners of the world, and it's really a privilege to be a part of a strong and active trading community. This COVID virus has made life a challenge for a lot of us, even tragic for some, and we do regret that. But I just love it that trading can be done safely within your own home. This can really be an ideal time for you to learn a very profitable system, and we're grateful to have the opportunity to show it to you today. And also, Eusebio is teaching 3 very important trading tips. So we think this will be very beneficial for all of us. Even if this is not your first time to see Eusebio share these tips, still, it's a great review, and you'll be glad that you're here. This is an exciting time for Max. We are so pleased with the ongoing performance of the system, and we've been trading it for about 12 years now, so we know it's a game changer for all traders, regardless of your level of skill. Whether you're a newbie or a long-time proven veteran, everybody loves the confidence and the added success that comes with the Max trading system. And more than 2,000 traders have graduated from one of our courses. Folks, that is a lot of training. We've learned how to do it extremely well. You might say we've had lots of practice at helping traders. So you will get the help that you need and even more. In fact, we are beginning our 73rd Max Standard course in just a few days now, where you can learn an extremely profitable, highly flexible system that is just excellent for all markets and all time frames. So if you're one who is hooked on the thrill of the fast charts, let's say from 1 to 5 minute time frames, you'll absolutely love the Max trading system. Or if you perform better on a slower chart, maybe 15 minutes or 30 minutes, Max is for you. If you don't have a lot of time for trading, or you just don't care to be in front of the charts for hours at a time, then you will really appreciate the 4-hour or the 8-hour or the daily charts, and Max is so good on all of those. I got to help one of our members set up 12-hour charts for the first time not too long ago, and he was so excited about trading that time frame. Really gives you time for family and work responsibilities, not to mention your sleep. That's important too. And if your preferred market is YMES, DAX, or other indices, or maybe Forex pairs or commodities, options, stocks, Max is great for all of them. It will be perfect for you. Very flexible, very powerful, and you'll also get a trading community, a good, strong trading community to participate in. And many of you will be taking a Max course with us in just a few days now. And along with that, you get the lifetime Max membership. So we look forward to trading with you for many years yet to come. And the community is not just fun and a lot of camaraderie, and that's good, that's important, but it also gives us a wealth of ongoing support and assistance for improving our skills that just never ends. The free trading workshops come at least 2 or 3 times every month for every member, and so you just continue to grow as a trader. New ideas are needed from time to time as the markets change, as the characteristics become different in the various markets, and Eusebio has helped us to meet this challenge by developing a solution that we call the Max Enhanced Trade Format Indicator, or ETF. It has proven itself to be really effective, a great addition to our charts, and I think you will love it. You'll get that indicator. You'll also get the companion indicator, all at no additional expense with your MAX training. And if you're not already aware, we have begun the process, let's say, of dropping the ETF name as part of our course name. So we no longer have the MAX ETF standard course, for example. We just have the MAX standard course. But nothing has changed other than the name. Everything else still the same. And all those great upgraded indicators will come to you as a part of that course. The companion is our price directional bias indicator. It can make a really big difference in trading results. And if you wrap all of these things together, the professional coaching, the correct price action analysis, learning something about global context and how to apply it, truly effective indicators, our trading community and the lifetime support and the workshops, all of these things, they combine to give you a great opportunity to learn trading that will actually make a difference in your life. And no, we do not expect you to just take our word for it. We want you to see it for yourself, and I hope you are already planning to attend the live trading webinar coming up this Friday of next week. We'll be trading the price action resulting from the NFP, the non-farm payroll announcement. So plan to get in on that. You'll get to see Max on real-time charts, see the effectiveness of the system. And what I really like about that is nothing can be exaggerated, nothing can be hidden. Everything is all right there out in the open for everyone to see. I hope you can attend, and if you can't, be sure to watch the video playback. Thank you again for attending today. If you have questions, ask anytime. And Eusebio, we thank you so much for all your work in developing the ETF and the companion, giving us such excellent training for so many years. I'll ask him to tell us a little more about his background, but if you don't already know, please be aware he is a phenomenal trader, a skilled teacher, and really enjoys helping his fellow traders. Eusebio, we're grateful. Thank you for taking time to show us the Max today, and the microphone is yours.
Thank you very much, Craig, for this introduction. Hello, everyone, and as Craig has already said, I hope you are all fine and safe in this very particular moment in our human being history. So just before describing what the Max is, so let me give the opportunity, give me the opportunity to present who I am with just a few words. So, in fact, I am a past software engineer. I was working in an IT service industry as a services manager, and I have practiced that profession for around 28 years. And during the last 15 years of that career, I have had the opportunity to work with important banks. In fact, my activity was only in the banking industry, with important banks in Europe, in Germany, in France, in Luxembourg, in UK, so several countries in Switzerland. And this has given me the opportunity to be in contact with some traders in these banks. And so I think I have learned some points with them. And I became a full-time trader in 2008, especially in the Forex, after having taken a course by the inventor, the designer of the Max trading system. I will talk about that in a few moments. Unfortunately, this inventor passed away in 2008, and his two assistants, Craig and Chris, asked me if I would accept to take over to teach the Max, or to give the course, and I have accepted with great pleasure. And so since 2009, I am one of the Max instructor of the Max trading system. But my experience in trading and investing is more than 13 years now. It's more than 38 years. I have investigated almost all the possible financial market, the Forex, of course, but also the futures market, the stock market, the options market. The only market I have not considered for the moment is the bonds market, or deeply the bonds market. And so that being said, so let me now present you what the Max is. And so you can ask yourself, but for what kind of person the max is designed. In fact, the max methods, and I say methods with an S because I will present you today two versions of the max, or two levels of the max primer and the max standard. And so these max methods are perfectly perfect. So for experienced traders who have already a lot of knowledge, a lot of experience, but who are still looking for consistency, not only consistency in producing profits, but also consistency in applying a trading process, because I consider that being consistent in applying a trading process is much more important than producing profit. The consistency in the trading process will produce the required results. If you are a full-time trader wanting for multiple profit, then you can add the max trading system to your trading arsenal, certainly. If you are a new trader, if you have not a lot of experience in trading, if you are still struggling becoming profitable, then you can consider the max trading system. If you need a reliable trading system, which is rather simple, easy to use, then you will have to consider the max trading system. As Craig has mentioned a few moments ago, the great advantage of a trading system like the max trading system is to be able to work from home. So if you are looking for an activity from the comfort of your home, or if you are looking for retirement and especially planning your retirement, or if you are simply looking for an income backup, then the max methods are perfectly for you, and the max can be applied, can be adjusted to your own time constraints. So because we can trade with the max on any time frame, starting from the 1 minute time frame up to the monthly time frame. So, and with all the time frame, the in-between time frame, you can possibly consider. As I have said previously, so the max trading system has been designed many years ago by Dr. James Pruitt, known by his student as Tiger, because of a strong temperament. So I will not describe how being grown by the tiger was a tremendous experience. Some of us has made that experience, and I can tell you that it has been very, very educative. And I have had the possibility to improve somewhat the max trading system due to the necessity to adjust the method due to the change in the market conditions. And the max is in fact a trading system which is based on three concepts. And these three concepts are in the name of the max trading system. The max in fact is an abbreviation for these three concepts. The M stands for momentum. Indeed, when we are looking for a trade, we need to see if there is momentum, but also volatility in the market. The A stands for acceleration. When I say acceleration, this does not mean we want to see the price accelerating. On the contrary, when the price is unfolding a trend, and of course we have to define what a trend is, so when the price is unfolding a trend, we want to accelerate the production of profits along that trend using a very, very powerful scaling technique. Once we open a trade, if the price unfolds a trend, we can progressively, under some very specific conditions and strict conditions, we can progressively increase our position by adding to our position in such a way to produce or to extract more profit from that trend. This is what we call acceleration. And the X of the max stands for exit, along the trend. And when the trend exhausts, we will have to make some partial exit. And at the end of the trend, we have to make a final exit. So the M stands for momentum, A for acceleration, and X for exit. As you have understood, so the max is essentially a trend following method. We can consider also through some kind of scalping technique counter trend trading. And in a trend following method, we have two possibilities, either a trend continuation or a breakout. And so we have several types of opportunity the max can provide us with. The max is also combined with a very strict trade risk management and money management, because of course when we want to use a profitable and powerful trading system, we have always to consider the three pillars of that system. We don't only need the system itself, which is essentially based on technical analysis, but not classical technical analysis. As you will see in a moment, we use some tweaks in the classical trading analysis to adapt to the market, but we need also a very strict, a very powerful, solid trade risk management and money management, and we need also to understand the global context which drives the price movement. So I'm going to explain some of the concepts of the Maxwell in a moment, but before that, and just to thank you for your presence, I'm going to present or to teach you 3 tips we use in the Max, and you can apply immediately in your own trading system, and these 3 tips will improve your trading. And so after that, I will so illustrate the Max through some charts. And so the 3 tips are the following. How can we use some divergence to take some decision, for example, to take some profit? I will consider also the opportunity given by long bars, when we see a long bar on a chart, and then the risk reduction technique. Let's consider a chart here. This is the Euro card moving in a downtrend. The importance of the indicator on the chart for the moment is not important. What is important is this indicator, which is drawn in magenta on the chart, which is the stochastic of the RSI or the STO RSI indicator. But this indicator by itself is not important. What is important to have is to have a momentum oscillator, a rather reactive momentum oscillator. And so when the price is unfolding a trend, we can see, for example, when we are in a downtrend, that the price will make successive lower lows. And we may have possibly successive higher lows in the oscillator momentum, so in the STO RSI in this case. For example, here we have a low. Do you see my cursor on the chart? Just tell me yes on the question area in such a way that I'm sure you are seeing what I'm explaining. So do you see my cursor moving on the chart? Okay, thanks. Okay, it's okay, fine. So we have a low here. We have then a lower low here. So we have 2 lower lows, 2 successive lower lows in the chart. But then we have 2 corresponding higher lows on the STO RSI. This is what we call a divergence. And when we have such a divergence is an opportunity to take some decision. Once we are in a trade and the divergence has been validated, because not all the divergences are necessarily good validations, we have to define what a valid divergence is. So at the close of this blue candle, we have the divergence. And once we have a divergence, we have to ask what a divergence means. In fact, this means that because the price is retracing, the price is pulling back, and of course it cannot be otherwise because any technical indicator is simply mirroring what the price is doing. And so when we see a STO RSI making a low, this means that the price is pulling back in that downtrend. And when we are in a short trade, an upward pullback is always a risk for the trade, because while the price is pulling back, the potential profit we were doing is partially disappearing. And so if it happens that the pullback becomes a deep pullback, we may be also in a losing situation. And so a divergence is not to be considered as predictive of the possibility for a trend reversal, but as the appearance of a potential risk in the trade. And this is key in any technical analysis, whatever the indicator you are using. And the question is, what is the risk I will accept? And so we have to define, after such an exit setup, where to make our exit. And so this is what this small horizontal white line represents. After the exit setup, we define an exit level, and then if the price hit that level, we make an exit. This exit may be a total exit or it may be a partial exit. In the Max, we privilege a partial exit in order to stay in the position in the case the price resumes the trend and will produce a larger movement. Later, we have another situation with also two lower lows in the price with two higher lows in the store error side. This is again divergence, and we repeat the process after the divergence has been validated at the close of the setup bar. The setup bar is the bar for which the divergence appears. We define an exit level, and if the price follows through and hits that level, we make another partial exit. Of course, in this example, I don't describe the possibilities for scalings, so to adding to the position. Later on, again, we have the same opportunity with two lower lows in the price, two higher lows in the store RSI, and so we define again our exit level, and if the price follows through, we make another exit. And at some point, at some very specific point along the trend, sorry, instead of making a partial exit, we will make a full exit, whatever the number of units we have on remaining in the position. So now, of course, in terms of divergence, we need to define what a divergence is, and in our max advance course, we define how a divergence appear. We define so what a valid divergence is, and we define also several types of divergences. We describe, in fact, 4 types of divergence. What I'm showing here is what we call the basic regular divergence, but we have other divergence like the persistent divergence, the external divergence, the group divergence. Now, taking a profit or making a partial exit with a profit or with a small loss will have another impact in our trading process. And this is the second tip. So taking a profit, whatever the technique you use, because we have not only the divergent technique, but we have many other exit techniques, allows to bank some profit when the price moves in our favor. And when we bank some profit, and if furthermore we adjust our stop loss, ESL is our stop loss. ESL means emergency stop loss. The role of the emergency stop loss is not necessarily to protect the trade. Of course it has a role to protect the trade, but it has the main role to protect our account with a maximum loss which will correspond to a certain percentage of our trading account, for example, 1% or 2%, any acceptable risk level. And it is always a hard stop loss in such a way that if at some moment, for example, if we become blind for the trade because of an internet connection problem, at least if the price, so we are at that moment not able to take a decision, and let's suppose we can we can reach the broker, the stop loss will be there to close automatically the trade if the price retraces and hit the stop loss in such a way to limit the risk to the maximum risk we have accepted when we have opened the trade. And if we adjust the stop loss, so we'll reduce the trade risk. And so we have 2 types of risk reduction: banking some profit when we have an exit setup, but also adjusting the stop loss in such a way that very, very often when you make a partial exit and you adjust the stop loss, very often your trade will be break-even or even possibly profitable. And so these are 2 important tips you can apply to any trading system and to any trading style. The next tip I would like to explain, which is another exit setup opportunity, is when we see in a chart a long. So this is another example. So with the divergence, sorry, I was jumping into ahead to the 3rd tips, but this is a similar example. So in an uptrend, we will see usually higher highs. And when we have 2 successive higher highs in the price, but 2 successive or corresponding lower highs in the momentum oscillator, so we have again a divergence, and we apply the technique in the opposite direction. Once we get an exit setup at the appearance or occurrence of the divergence, we define an exit level, and if the price hits that level, then we make a partial exit. And you can see that our exit level in this case, in this example, is a little lower than the close of the setup bar. The reason for that is the following. When we see an exit setup bar, what does this mean, in fact? And we can always ask who are in control of this trend at that moment. Obviously, the buyers are in control. And at some point, when we have an exit setup, in fact, this shows that the sellers try to take the control of the movement. And if after the close of the setup bar, we see again a selling pressure, which help us to define our exit level, this means that the sellers are still trying to take the control. And if they succeed to take the control of the movement, we may experience a trend reversal. We never know that for sure in advance, of course. But at least this is what the exit technique are showing us. When the opposite category of traders try to take the control and of the movement. And this is why we have to define when the risk becomes too much important and forcing us to take a decision, which in this case will be an exit, at least a partial exit, until we make a final exit. So the divergence and the stop loss adjustment are two important tips in any trading process. Another very nice exit technique is the following. Sometimes when the price is unfolding a trend, we may have what we call a long bar. LB in abbreviation. We like to use abbreviations in our trading process on our charts. And so what is a long bar? A long bar is a bar having a length way larger than the previous candles. And so in the course, we have a precise definition, a precise criteria to define when a bar is a long bar. But let's say, just to make it simple, the length of the bar must be at least twice the average length of the previous candles. And usually, we may easily eyeball that a candle is a long bar. It is obvious in this example that this first long bar is a long bar. And so a long bar presents always a nice opportunity to bank a profit. And so the long bar will be always an exit setup in our approach. Why? Because approximately 2 out of 3 times a long bar will be followed by a pullback and sometimes even a deeper pullback or a reversal. In the forex, this is extremely important. In some other market, on the contrary, a long bar indicates an increase in the momentum, which is an opportunity to jump into the trend. But in the forex, a long bar usually very often is followed by a pullback because it always represents a nice opportunity to bank some profit. And so, remember what I have said previously, to reduce the risk on the position. So how do we proceed in order to apply our exit technique? Once the long bar has closed, we define an exit level corresponding to a portion of the long bar. We can take, for example, 1/4 of the length of the bar, 1/3 of the length of the bar, even 1/2 of the length of the bar to define our exit level, starting from the extreme of the long bar, in this case the high of the long bar. So we define our exit level. If the price retraces and hit that level, we make a partial exit. We can see that in this example the price has continued to pull back before resuming the uptrend, and then another long bar has appeared, given another opportunity for an exit. And in this case, the price has made a very small pullback. Sometimes, of course, approximately 1 out of 3 times, we will have a long bar, but the price will not retrace enough. In such case, we don't apply the exit technique. The price does not follow through, so we keep our partial position open. By the way, a partial position in the market will be called a unit. Whenever we open a trade, we consider that the trade is made of several units, in general 2 units. And when we make a partial exit, we close 1 unit, keeping the second unit as a runner if the trend resumes, until we pinpoint the exhaustion of the trend. And of course, when we are trading a trend, we can apply all these exit techniques in one exit technique approach. For example, we see a long bar, we make a partial exit, we see another long bar, we make a partial exit, and then if later we see, for example, a divergence, so we can apply again the exit technique. So we have at any moment at the close of each candle usually, we will have to consider if an exit technique among all the exit techniques we have at our disposal does not apply. If it applies, then we define the exit level, and if the price follows through, we close one unit. If the price does not follow through, we keep our unit as an open unit, and so this unit will participate to catch more profit when the trend will resume. And so if you apply these three techniques in your present trading system, you will improve your situation. And believe me, when we are in a risk-free trade, once we have made a first partial exit and possibly adjusted our stop loss, if these two decisions produce a risk-free trade, you will feel much more comfortable to handle the rest of the trade and perhaps to develop the courage to stay longer in the trend to catch a way larger of the trend. With the max, we like to catch almost the entire length of the trend, as I will show now in some max trade examples. So if you have any questions about what I have just explained, so feel free to post your questions in the question area, and we will be glad, Chris and myself, to answer all these questions in the Q&A moment, so later today. Now let me show you some concept and some example with the max trading system. Today we propose to you two levels of the max trading system, the two flagship levels, the max primer and the max standard. When we observe a max chart, the max chart is made of some indicators. On the main chart we will have a long-term indicator which we call the home base and the home base channel. It is an exponential moving average of around 200 period, in fact 233. There is nothing secret in the indicator we are using. And then we have, you can see this small white moving average is what we call our momentum moving average, or Mo line. This is our Mo line moving average, and then it is a 21 exponential moving average, and then we have these two yellow and orange lines are called the Etf lines, and the Etf lines have the aim to define what are the movement inside a trend we want to trade. We can see also on the chart some horizontal lines, some are straight lines in color, red, magenta, white, and some of them may be, depending on the pair, may be a dashed line. And so these levels are what we call the max price levels. They represent possible supply and demand level on the chart. And they are prepared, in fact, every Saturday. And so for this example was made on the 23rd of March, so it was, I think, Tuesday or Monday, so the beginning of the week. So these max price levels have been prepared on the previous Saturday. And so the max price levels, our supply and demand level, are valid for the entire week. This means that they are long-term supply and demand level. This is why they stay valid for the entire week. And you can see how the price nicely reacts most of the time along these levels. Then we have a set of indicators. With the max primer, we have only two indicators. The stow RSI you already know. I have shown how we use or some of its usage in the previous tips I have described. And then we have the companion indicator, which is made of two lines, one line in green and red, and one line in blue and orange. They are called the companion indicator, or the technical bias, directional bias indicator. The blue and orange line represent the fast bias or short-term bias, and the red and green line is named the slow bias and represent the long-term bias, in such a way that when the slow bias is red, we will consider only short trades, and when the slow bias is green, we will consider only long trade. But these trend directions are only corresponding to technical trend. We still need to take into account the third pillar I have described in a moment ago, I mean the global context. And so we will trade in the direction of the slow bias only if that directional bias is in agreement with the global context. In this example, the global context, we call the max advantage bias, was telling us that that day we had to trade this pair, which is the pound yen, downward, and so to consider only the short trade. And so we will take the short trade, only when the slow bias is red. And you can see that in this case, we have caught a large portion of the trend. Now, how do we handle the trade? We have to identify at the very beginning of the trend an entry setup, and an entry setup, which is named here short entry number 1, is always a specific pattern the price has to define. And once we identify that pattern, so we have our entry setup, we define our entry level, we fix our stop loss, and if the price hits our entry level, we open the trade, because we know that this trade is in agreement with not only the technical directional bias, but also the global context bias. And then we see what the price will do. And whenever, with the max primer, we have an exit setup, we make an exit. For example, here we have a long bar. This long bar is an opportunity to bank a profit, so we define an exit level. And an important concept we have in the max is the following. It is an important rule in terms of trade risk management. An exit level will stay valid until the price hits it or until we get a better exit level. And it happened that in this example, after 1, 2, 3, 4, 5 bars after the long bar, the price has retraced enough to hit our exit level, so we close one of our 2 units. And this unit has banked, in fact, a profit of 23 pips. Then we have the possibility to adjust the stop loss. I have not shown here the stop loss adjustment, but we adjust the stop loss. But you can see in this example that this partial exit alone, because it is larger than our stop loss, this profit alone will, if we do not adjust the stop loss, will cover more than half the risk of our trade. Because remember, this profit is made only with 1 unit, but we have another unit which stays open, so the second unit has still a risk. And this unit, if the price retraces and hits our initial stop loss, will make a loss of 20 pips. So, but these 20 pips loss will be compensated by the 23 pips profit made by the first unit. So we are, in fact, at this moment, break even. If we adjust the stop loss, we will lock more profit. But it happened in this example that the trend resumed in a very, very nice movement, a nice fall. And again, here we have another exit setup when the price, in fact, is rejecting our max price level. And when we have such a rejection, this represents also a nice opportunity to bank some profit. And so we define an exit level. The price has pulled back, reached that level, so we close the second unit, catching a very, very important profit. So, and so in this trade, the first unit has caught 23 pips, the second one 99 pips, so we have a total profit of 122 pips. And because the stop loss was 20 pips, so the reward to risk ratio is 3.05. So this trade has produced a profit of 3.05 R representing our risk. It may be 1%, it may be 2% of the trading account. It will be the amount you define. So this is what the max primer gives. So we have an initial entry, we close 1 unit on an exit setup, and we close the second unit on another exit setup, or we can wait for the trend to reverse. Now the same movement handled with the max standard, which includes the scaling process, in fact. By the way, the exit technique may be called also the scale out process. But when we include the scaling process, we will have a result which will be completely different. And let's look here. We have the same initial entry, the same stop loss. We have the first same exit. By the way, an exit is called an MX, a momentum exit. And then soon after the trend resumed the downtrend, we had an opportunity to make a scaling. So we have a second entry. And a scaling is nothing else than another entry pattern. Each of our entry setups, and we have several entry setups, correspond to a specific pattern. We may have a pullback break, we may have consolidation zone breakout, we may have a trend continuation. So we have several types of entry setup. And later on, while the price was dropping, we had at some point another entry setup for another scaling. So we make a third entry, and then we have here the same exit like in the max primer with a max price level rejection, and then later we have another exit setup appearing. And so on each of these exit setups, so we close one unit. The three entries correspond to 6 units we have at our disposal, and for each partial exit we close 1 unit. So we are left after the third partial exit, we are left with 3 opened units. And later on, when in fact we observe a trend reversal with an exit setup to go long, we proceed to the final exit of the trade, closing the 3 remaining open units. And when we count the profit made by each unit, in fact, in this case, we see that the same movement has produced a way larger profit of 340 pips, representing a reward to risk ratio of 8.5, so giving a result of 8.5 R, to be compared with the 3.05 R result of the max primer. So the scaling technique, when applied properly, will multiply, in fact, the result by a factor between 30% to 300% in general. In this case, we have a profit more than 2 times larger, so almost 3 times larger, in fact. And so these are the 2 levels of the max we propose to you today. This example is the pound yen on the 5-minute time frame, but of course we can trade, and it is a pair, it is a forex pair, but we can trade any time frame and we can trade any instrument. Let me show you now the example with another instrument. This is an index, and I have chosen, for example, the Nasdaq on the previous day. So this was Monday, last Monday. We can choose the S&P 500, we can choose the Dow Jones, we can choose the Russell, so whatever the instrument you want. I could have chosen also a commodity like gold or like oil. It doesn't matter. As long as the instrument is trending, it will work nicely. And so in this example, what do we have? We have an initial entry corresponding to an entry setup at the beginning of this uptrend. My small glossary is hiding the beginning of the green line. I'm sorry for that, but we have an initial entry. And because we are using in this example the max primer, we know that when we will have an exit setup corresponding, by the way, to here a long bar, so we will make an exit, and then later when we have another exit setup, we will make a final exit. And so we have a first trade making a 0.76 R result. Later on, the trend resumes, giving a second trade opportunity with a second entry. And this second entry is followed similarly with a first partial exit and then the final exit, giving a second trade with a reward to risk ratio, in this example, of 1.36 R. And later, again, the trend resumes, giving a third opportunity for an entry, followed by the two exits, the partial exit and then the final exit, so given another result of 1.28 R. And so we had 3 trades in this trend, and you can see that after the final exit of the third trade, indeed the trend has reversed nicely after some consolidation. We handle this kind of situation in our trading approach, either with the max primer or with the max standard. So, and then we can see that the total of these 3 trades during the European session, these vertical line you see on the chart correspond to the market opens or close, and so this was essentially the European session. So these 3 trades have totaled a number of pips of 312 pips for a reward to risk ratio of plus 3.41 or 3.41 R. If your risk is 1%, these 3 trades produce a result of 3.41% on your trading account. If you use a risk of 2%, this represents a profit of 6.8% on your trading account, which is a nice profit. Now, of course, not all our trade will be profitable trade. if we use the max without using the global context, so we have a winning rate of around 70 to 75%, depending on the market conditions. But if we include the global context, then our winning rate jumps to 90 to 95%. And if we have time at the end of this presentation in the Q&A segment, I will show you some very recent example of these trades. Now, the same movement considered with the max standard gives a different result. Remember that number of 3.41. Oh, by the way, if we inverse the 4 and the 1, we have the pi number. Remember a few days ago we had the pi day, so I like pi. And that day the bias, the max advantage bias, by the way, was upward. So we had to take only the long trades. The same movement when we consider the max standard allowing us to make scale-ins, so gives a profit which is way, way larger, 6.6 R, so almost two times the result of the max primer. We have the same initial entry, the same stop loss, then we have a partial exit, a third scale-in, immediately followed by another partial exit, leaving us at that moment with 2 open units, followed almost immediately after with another scale-in, the entry number 3, and then the price takes off, giving us a few bars later another partial exit, followed by another scale-in, followed by another partial exit and another scale-in, and then the last partial exit, and finally the final exit, corresponding to the trend reversal, essentially to the trend reversal. There is more than the trend reversal in this case due to the exit technique we are using. So we had 1, 2, 3, 4, 5 entries and 5 partial exit and the final exit. So, and this trade with that scaling and scale out technique combined together produces a total profit of 449 pips with a reward to risk ratio of 6.6. So this is the feature of the max. The two examples I have shown correspond to two different instruments, one pair, one index, in the 5-minute time frame. The 5-minute time frame is our favored time frame, but we can trade any time frame. And the next example will be an example in the daily time frame. And this was a recent long trade ending last Thursday or Friday. So we had here the beginning of a new uptrend. The global context was upward for the pound yen, and it is still upward for the moment, so giving a first initial entry with its initial stop loss, then a partial exit, then here a final exit. We are considering the max primer level, so we don't apply the scaling technique. So we have a first trade producing a 0.78R result, and immediately after that, or a few bars later, the price resumed the uptrend, giving a second trade opportunity, and we follow the same process, a first partial exit and then the final exit, giving a second trade with a 1.41R result. And when the trend resumes, again, we have a third trade opportunity. And this is an example when one of the two units may give a loss, or sometimes we may have the two units making a loss. In this example, the first unit produces a profit, 111 pips, but the second unit, when we have the trend reversal, gives a loss of 120 pips. So the third trade is a losing trade. Now, the beauty of the max is whenever we have a losing trade, the loss will be always a small loss. In this case, 0.02R. Now, obviously, this is a very, very neglectable loss, but on average, when we have a loss, the loss will be around minus 0.4, minus 0.5R. So let's say, to simplify it, 0.5R, half R, which is easily recovered with one winning trade. And when we have 70 to 75% of our trade ending with a profit, we don't have the rest of the percentages as losing trade. We have also break-even trade. We have on average 20% of losing trades. So when you combine these numbers, you can easily conclude that the max has a positive expectancy, even the max primer. But now when we consider this uptrend, this long trade with the max standard, including the scaling process, so you can see the details of the decision along that entry, an initial entry, a partial exit, a scale-in, a partial exit here, another scale-in, partial exit, scale-in, partial exit, and then final exit. You can see that in this case, due to the scales, the last unit, even after an important pullback, corresponding to a trend reversal, a possible trend reversal, even the units we closed at that moment, we were closing 3 units, they are all profitable. And the profit was a nice profit of 2,936 pips, corresponding to a reward to risk ratio of 7.34, so giving a result of 7.34R, to be compared with the result of the max primer, so more than 3 times the result of the max primer. And if you use the tips I have explained previously, banking some profit with a partial exit and adjusting your stop loss, you will be amazed how a scaling technique will not be dangerous at all. But you need to control correctly the partial exit technique and the stop loss adjustment technique. This is absolutely key. And so this was an example of a daily time frame. So the max applies to any tradable instrument, provided there are enough volumes, of course, and so any time frames. And so, as you have seen, the max provides the trading methods, primer, standard, and concept that work. During the course, we explain why the concept of the max are working. And the explanation is related to the behavior of the big boys. The big boys being the traders in the big banks. You know that the market, especially the forex market, is way largely controlled by just a few banks around the world, around 10 banks, 10 to 12 banks. They control more than 80% of the market, and they have specific approaches in handling their trades or their position. And several of the concepts we are using in the max are linked to the behavior of these big boys. So, during the max course, in fact, whatever the level of the course you may consider to follow, so every max course provides a lot of help. Not only the training, of course, but also some support to reinforce your trading skills in order to help you to develop and to improve your trading skills. Chris will describe in a moment what kind of support we have, but just to give you a small idea, each of our training session is followed by a homework assignment. You have to produce a homework at the end of each training session, and we grade in detail each homework, and each student in the class will have access to the homework of everyone else in the group. So in such a way to multiply the level of education, the level of learning the course will provide. And so you will reinforce not only your trading skill, but also the money management you will apply to your own trading process. Each max course we teach you will provide you confidence in your skills at every levels of the skills through several activities we propose, the mentoring aspect along the training, but also with the homework, as I already explained, and some free workshop or free activity we call scrolling party we provide every Saturday for our member. But Chris will tell you that in a moment with much more details. And so I have proposed you 2 of our flagship training, the Max Standard and the Max Primer. The Max Primer is simply a small sample of the Max Standard, just to give you an idea what the Max may be and how the training we provide is good or not good for you. But I have never seen a student of the Max Primer explaining that the training was not good. So they have always, it has always provided excellent benefits to our student. And so, I have presented to you some important aspect and some example of the MAX trading system with some example of it. And now I'm going to give the mic to Chris, who has some other very important information to share with you.
Okay, hi everybody. I'm Chris. I'm kind of backup trainer and homework producer, and run the weekend practice sessions. Well, Eusebio does, but I'm there too. The whole idea for trading is so that you come up with some type of financial security for yourself. This year has been really a good, well, this past year, 2020, really good example of why it helps to have your own independent business, like running foreign exchange once you get it going, so that you can keep yourself away from external shocks like COVID, businesses slamming down, being out of work, etc., etc. So with the Forex, or trading of any type, because the MAX is just not limited to the foreign exchange side of things, but we use it for training because it's pretty much open 24 hours, and the feeds are free, so you've got plenty of opportunities to practice and test the systems out on before you actually go out in the world. We use foreign exchange a lot because it's pretty much a 24-hour market, kind of. There are some dead patches in it and some periods where it's less advantageous to trade, like the Asian session compared to the London session. The London session is the best mover, but it's 24 hours, so it can be applied to most people around the world. But the whole idea is to give you a really good backup income or a replacement income for whatever you need, for whatever ideas that you've got going. So next slide, please, Eusebio. Thanks. So the thing is, how are you going to get there? And the reason for this presentation today is to convince you that the MAX is a really good trading system to use. A lot of people keep on doing the same old thing, like picking weak systems that don't have much training, and with very little interaction. You're kind of given a PDF and sort of set off on your own. What we do with the MAX is we try and personalize it a lot more. We have supervision, like through the homework or through the weekend practice sessions, which are free. They're ongoing. And for the MAX's listing, we've got one tomorrow if you've missed the email, so we don't miss out this weekend. And normally they run at this time. So you get plenty of supervision. The interaction can be as much as you like. In the weekend sessions, we can unmute your mics and you can ask us questions directly. Eusebio explains straight back. We pull up your charts, we go through them bar by bar. We want you to get consistent results, and the feedback that we give you is personal and can be applied to everybody as well. So you get out of our bus as much as you kind of ask for and you want to put in. Next slide, please, Eusebio. So some of the challenges that a trader has when they're trying to start out trading is, well, there's a whole pile of them. On the chart side of things, you have poor price action, and over the past few years we've noticed that the movements in the foreign exchange are tightening up, whereas in the share market they're kind of going quite bullish at the moment. There's small tight ranges, very sudden movements, especially during Brexit. The pound was just jumping whenever somebody did any sort of tweet at all. It would sort of suddenly go off the charts almost. It's difficult sometimes, if you don't know what you're doing, to pick what direction price is moving. And if you're using indicators and such, or if you're completely relying on a technical analysis, the indicators tend to be lagging. What we do in the MAX is we're very risk averse. We don't predict because we can't predict the markets. Our indicators don't predict, but they give you an indication, that's why they're called indicators, of where things could go. But the really important thing is that when you get into a statistically good opportunity style trade, then it's up to you to manage the risk. And if it starts looking risky, then you get out. it's like driving a car. You can hop in the car and think, I'm going to go this direction. The road looks like it's going there. But if the road suddenly goes off a cliff, you don't just follow it over. You stop and find another way of getting to your destination. So we don't predict. We monitor the risk all the time. And there was a question that came up in the chat area that was really interesting, which kind of I might be able to help here. The question was, no, I've lost it. Now the mouse is not working. Okay, so you take profit off the first trade and then move the remaining 2 trades to break even and then trail the stop loss. That's not quite what we do. We place essentially 2 orders per trade, and when the charts say to get out, then we take profit from the first trade. So that's the one that kind of gives you your bread and butter, and then we let this second one run. We don't aim for any targets. We don't have any risk reward, or much of that goes. We don't do the RRR that a lot of people say, like, this looks like I'm going to get a 1R return out of this, so I'm going to get into this trade. We do evaluate the trade for risk, but we don't sort of predict how much we're going to make out of it like that, because we don't generally know how far price is going to go. It could just go a few pips, or it could go several hundred pips, as it has done in the past, and you don't want to get out before the movement is finished. So our whole idea is, rather than being just greedy and getting 10 pips out of a trade, we go for super greedy and go for the whole movement as much as we can. And that's where the standard kicks in. Once the movement really takes off, then we can keep adding to the trade, adding orders in as it goes, and multiply our profits. And that's how we get to over 300% in some trades. But most trades these days, you can magnify the profits really nicely by having the extra orders come in. Once a trend starts moving reasonably well, like over 40 or 50 pips. Okay, sorry, back to my presentation. So some of the other challenges that you get, there's not even much details in the simple basic charts that people get. They need like a roadmap. And we supply some of that information for you for free on our Newswatch page. So if you haven't looked at it yet, Xavier's already shown it to you. But we don't just try and help our paid members, we also help other people, general Forex people. So the Newswatch is really helpful that way. It tells you when there's major events coming up to avoid, and we also can supply you with some price levels for 4 of the pairs that at no price, at no cost, that you can use to get an idea of possibly where price is going to go or where it will take off from. Next slide, please, Xavier. So the way that we overcome these challenges with the MAX is that the MAX adapts to the challenges. We have various training and methods for figuring out what the price action is, like, are you in a trend? Is this a breakout? Are you in a choppy mode? Is this something that we call spaghetti, which is a very small movement where there's actually no way of getting in? If there's larger moves, we can, as I was saying, add to your orders and milk as much as we can from the trend. If there's very fast movements, the MAX is nimble enough to be able to take advantage of those when price switches backwards and forwards. And because of Eusebio's directional bias indicator, the part of the ETF side of things, he has produced a direction indicator which gives you a really good idea on which way the trend could be going. And like I said, if it doesn't work out, then we have really, really good risk management side of things to say, okay, this isn't working out, get out of this trade now and start looking for something else. And in the standard course, when Jim was around, back in 2007 to 2009, he developed a really amazing dynamic support and resistance level indicator, which works like magic. You could almost trade just with the bias from Eusebio plus Jim's on the charts and not have any other indicators at all, and you would do very well out of it. But they work like magic. They give you an idea on where you are in a movement, where price is going, where it's likely to fall back to, and where you can enter from. But that's only available in the standard, not in the prime side of things. It's like driving with the headlights on, essentially. And like I keep saying, we try and minimize your risk as much as possible. Money and trade risk management is superb. We've tried all different sorts of things. Like, for instance, Mr. Johnson said, so we placed 3 trades. No, we only placed 2 trades. And we've tried different numbers of trades on orders on a trade. And 2 is pretty much the optimal number to use. Any more than that, you start decreasing your profits. Or, yeah, you start decreasing your profits and increasing the complexity of the trade. So we want to protect your account money and your dollars, your profit side of things. So next slide, please, Eusebio. So the way we do this is we give you really precise and detailed setups. If you're trading the 5-minute chart, then you'll find the setup, and then typically within half a pip to 3 pips, you'll be entering the trade on the next bar. It's that precise. So there's a lot of attention that needs to be paid to it. We supply homework, and I'll give you an example of what that looks like on the next chart. But you don't have to do it, but we ask you to do it, and that's to make sure that you actually, while you think people think they understand that they've, sorry, let's back up. We can say something and people think that they've understood it, but it's not until somebody else from the outside looks at what the person has done to actually make sure from a third person perspective that what they think they've done is what was actually taught. There's been a lot of times when people have said, look at this chart and see these lines on it, and this is blah, blah, blah. And I've been looking at the chart horizontally, whereas they were looking at it vertically. It's that kind of thing. I thought I was understood completely what was going on, and so there was no problem. But it wasn't until somebody else saw what I was doing and said, no, you've got that backwards. So doing the homework is a really nice way of validating that you've actually doing it correctly. We don't care if you do it correctly or not. We do, but it's good that if you do it correctly. But it's much better for you to be validated and know that you're actually doing things correctly. Foreign exchange, or trading mostly, is working in a black box with very little input from the outside until afterwards. A lot of times people can get into a trade, it works really well. Other times they get into a trade and it doesn't work well. And if you're not really comfortable with your understanding of how the method itself works, then a lot of people don't know if they've done something correctly or if it was the market or not. So by having a third person come in and have a look and analyze your charts and say, yes, you did everything right, but it was just the market this time, or you forgot about the news coming up, or you forgot about your stop loss or something like that, then that's a huge boost to your learning and understanding of what's actually going on. So hence the personal feedback and the tips, suggestions. Sometimes there's encouragement. Most of the times we do lots of joking. As I've said, with the Max, we have practice sessions on the weekend. The group of us get in, we can unmute the microphones, and there's no cost for it. We go through the charts. A lot of them are the low-end charts, and occasionally we have the more advanced stuff comes through as well. So we try to provide as much after-course support as possible, and you get what you ask for, essentially. Here's an example of what the homework looks like. So on the left-hand side is an example of what the charts look like. We'd have a line there and where you've entered and where your stop is, etc., etc. It's very simple. Well, this one is. And on the left-hand side is the instructor's reply. generally mine. So they get quite detailed. We can go through it bar by bar. We've got an indicator which numbers the bars for us so that we can get quite precise and pinpoint stuff rather than trying to say, without the bar number, it's a nightmare trying to mark people's charts up. But you can see that there's quite a bit of detail there. That information on those replies don't apply to that chart, so they're mismatched. But you can get an idea on how much detail we can go into. So what you get from our training is a complete system, whether it's the primer. We're offering two courses today, the primer and the standard. And the standard is the flagship. It's got all the bells and whistles. And once you've completed the standard, you can actually go on to further courses in the future, but you need the standard first. So you get all the indicators, the templates, the videos, etc. We use MetaTrader to train with because it's free. Most brokers have it, and the data feed is free, so there's no other costs other than the course itself. The training is precise and detailed as we've gone through. Eusebio does the training, as you've heard. If he's indisposed, then I step in as a backup. We provide one-on-one guidance via the homework and also through the scrolling parties. We analyze the hell out of a bar, or Eusebio does. And you have a lifetime access to all the materials and support. The weekend sessions, the live sessions, like I think we've got one coming up this weekend. I was looking at the news just now, and I see that the non-farm payroll kicks in the middle of the Easter holiday, which is really unusual. But yep, I think we might be having a free session during that, or if not, if we are, you say we just dumped Eusebio in it, but we'll send you out the information on how to join in and check it out. Through the Newswatch page, we show you which pairs are the best ones to trade based on the movements over the last 4 weeks, what news to avoid, and what to do about it if there is news coming up, and what news to look for, because sometimes things like the non-farm payroll or the pound sometimes has, and the euro have really good news that comes out, that it pays to wait for the news, and then if there's been if it was a good news or a bad news more than normal, then that can be really good to trade as well. So we forewarn you of those, and you can get access to a smaller set of price levels to help you trade some of those pairs. And like I said, we use MetaTrader. Next slide, please, Eusebio. So we try and give you as much as we can. And even if you don't take the course, the Newswatch is free. You can take that up. This is kind of a repeat page. I thought so. So the entry setups are high probability ones. There depends on the time of the year, essentially, or what's happening in the world. But most times the probability of an entry on a smaller time frame is around about 65–70% accurate that it's going to move in your direction. On the higher time frames, it gets even better. It's something like 85–95% if you go up to the H4 or the dailies. So very high probability opportunities. We can't predict, but we can say, based on the stats, if you see this kind of pattern, then get in on it. And with the standard, you're able to add to your trade very, very safely. So what we want you to get out of this is something that's powerful and safe for you. So very little risk so that you actually keep your money. Like I've told you, the win-loss ratio is 65 to, say, over 95%. Standard course boosts things. The primer is very profitable, but the standard just blows it away hugely. And the whole idea of this is to give you a really good method so that you can achieve your financial goals, so that you don't have to worry about things like pandemics or losing a job or things going out of business, medical bills, or be able to look after your kids and stuff like that. Okay, next slide, please, Eusebio. So the way we do this is we have two courses, as I've been saying. We've got the Max Standard that runs for 7 sessions. It's got multiple entry scenarios, so you can get as much out of it as you can. It's highly profitable, and it's got really, really good trade and risk management once you get into the trades and into a trend. The Max Primer is a cut-down version of it, and in fact it just takes up 2 of the first 2 class sessions of the standard. So it's only 2 sessions. You get a basic a couple of entries and some exits. It is profitable, but it's not as busy, or as there aren't as many opportunities as the standard, and you don't get the ability to scale in with it as well. The risk management is good, but it's basic, so you don't get to figure out how to safely scale in or anything like that. So it's essentially a buy and sell system, whereas the standard is get in and then start multiplying your profits if you can. It depends on the movement itself. So when the movements are good, when there's say 40 pips plus, then you can start scaling in. Okay, next slide please, Eusebio. So the one to go for actually is the standard, and the standard course starts on April the 8th, about next week or the week after. I've lost the dates. Normal price is $2,999, but we've got a webinar special again of $2,399, and it runs for 7 weeks plus a bonus session at the end of it. Next slide please, Eusebio. And sorry, just saw a chat about the prize giveaway. It'll be in a minute. Okay, and the primer course starts on the same day. Like I said, they run concurrently. It's 2 sessions. Normally it's $300 for the course. We have a webinar special of $159. A lot of people do the primer course and then upgrade to the standard once they've had a taste of the training and the depth of knowledge that comes through from it. The primer course, even though it is supposed to be a cut-down version, has a ton of information in it. Eusebio kind of overdid it, I think. But it's a complete course in itself, and like I said, it is profitable. But the standard is the one to go for if you really want to increase your profits. Thanks. So here are the 2 details. We'll put the links to the courses in the chat area and also send them out to you. There is one question in the room which I kind of alluded to during the session, and Eusebio, maybe you'd like to explain a bit more about it. It's from M. Johnson. He's written, so while you're explaining about on one of your charts, he's written, so 3 trades, after take profit for the first trade, move the remaining 2 trades to break even, then trail the stop loss. And then the second part, or get out when a candle pattern goes against you. So the reason that I'm bringing this up again is that a lot of systems sort of talk about move the stop up to break even and keep trailing with the remainder of the thing. We don't have a target of a break even, and we don't have 2 orders, we don't place 3 orders per trade. We essentially place 2 orders. We call them units. So it's 1 order which is broken into 2 units. And we take profit on the first unit and let the second one trail, essentially, until our indicators tell us to get out. We have 2 sets of stops running. One is a hard stop in case your machine dies, so that you protect your, like I said, when you place your trade, you have a particular risk on your trade, and that's what would happen if the stop gets hit, if your power dies, or if you lose your connection to your broker. And we keep adjusting that as price moves. So we don't just aim for break even, we can move it up past break even and further, depending on what price is doing. But we also have mental stops, which are closer to price than the trailing stop. So we don't want price to come right back to the hard stop, because we'll lose a lot of profit. So we have ways of protecting, using the mental stops to protect our profits as well. Eusebio, do you want to say more?
Yeah, in fact, when we consider, let's go back to one example of the trade. So, for example, in this trend, with the Max Primer, which is a very, very simple version of the Max, let me take my pen. So here, I will show you exactly what we are doing. So, in fact, we have a first entry, and when we have closed the second unit, so the trade is closed. And then when another opportunity happens, we follow the same process. So we have a second trade, and then we have a last trade. So with the Max Primer, we have never several trades opened simultaneously. Each trade is completely individual. We open a new trade when the previous one is closed. Because if we want to have several trades open simultaneously, this is very similar. Not exactly, but it's similar to using a scaling approach. And the scaling approach, in order to be not risky and to be profitable, requires specific rules. And this is why we separate the two courses. The Max Primer has the aim to learn the very basic concept of the Max, and then with the Max Standard we go much more into the details in order to be able to take into account in a very safe way all the scaling process. Of course, along the trade we will adjust the stop loss in a specific way. There is not a fixed rigid rule to adjust the stop loss, but we have to take into account what is happening in the price action itself. And so we adjust the stop loss progressively in a specific way, following specific rules, in order to protect the trade and to lock more and more profit. And we will show you that if we have, for example, a very ample trend with many scalings, more scaling we add, safer the trade becomes, and more profit will be locked on the stop loss, of course. So this is a very, very special process to make the scaling very, very safe and less risky, progressively less risky when we move forward inside the trend. So.
Okay, thanks, Eusebio.
Okay, thank you very much for everybody. Thank you for your participation. Thank you for your interaction, your comments, and your questions. We always appreciate that. I wish you to stay sane, to stay safe, you and yours. And so let's see in the future in one of our next activity or courses. I will close the room in now exactly 2 minutes. Bye everyone, and in the meantime, take care.